On Wednesday morning, the USDA released its latest crop production report. It estimates U.S. corn yield at 122.8 bushels per acre. The country's total production is down 1% from last month and would be the lowest since 2006. The agency forecasts harvested acres for grain at 87.4 million. On the soybean side, production is down 2% from August, with yields expected to average 35.3 bushels per acre. Arlan Suderman joined us after the release on Wednesday morning, a somewhat unpleasant day here on the grounds, as high winds forced organizers to close the show early around 3 o'clock. The hand-washed Market Journal van didn't stand a chance. In a relatively calm machine shed, we talked with Arlan about the grain market outlook and if the latest USDA forecast adds up.
Well, it's tough to add up the numbers. USDA had to make some assumptions on soybeans because ending stocks are bare pipeline supplies. So any drop in production had to result in a drop in demand. And then they have to assume that price will do that rationing of demand down the road. And the markets seem to understand that pretty well in the soybean market. They don't grasp that as much in the corn market. There's a couple things that don't really add up on the corn market. First of all, their harvested acreage estimate. Our surveys show that harvested acreage will be about 3.5 million acres below where USDA is at. And I think the data supports that pretty strongly. If you look at previous years with a drought, even another 3.5 million acres off of that would still be a very high percentage harvested versus planted for a year like this. And I think the reports, the anecdotal reports, would support that as well. The other thing is what's happening on a global scale. Seeing stocks continue to tighten up. USDA is failing to acknowledge that. And overall, when you put wheat and corn together, since they're so interchangeable, the USDA is calling for about a 2.7 billion bushel swing in demand. I just don't see that happening without higher prices.
This is the first time we've really seen yield not drop off precipitously in one of the crop reports. Does that mean that it's hard to argue that the high is still in store?
Well, there's a lot of people arguing that, okay, USDA's got the yield figured out, so therefore the high is behind us. And I would say, okay, demand cannot exceed supply. We still think the corn crop is smaller than USDA projects. We think it's close to 9.86 billion bushels and have data to support that. The soybean crop, they're probably getting close, although I still think it's going to be edge a little bit smaller than that. But in the end, demand cannot exceed supply. And we're still seeing the demand out there, the corn moving out the door, exceed the level that will be supported by the size of the crop, and definitely see that in soybeans. We don't see soybean demand being rationed at all yet, and if anything, it's increasing.
Do you have a level in mind there, a price level in mind that you think demand might start to ration at?
I believe that corn is going to have to dramatically slow ethanol production and livestock production, and I think it's going to take a price above $9, even if we get a waiver of the RFS in order to do that. Soybeans, I think it's going to take a price above 20. That doesn't mean it'll happen next week or next month. It may have to be next spring when that happens, but I believe that's what's going to have to take place.
Let me just ask you one more about ethanol. You mentioned rationing there. When does it happen, though? I mean, we've sort of hit a lull here from the onslaught of publicity of mandating a waiver here. Do you think that continues?
Yeah, and we got about a 2-week extension of the comment period this week. So I expect that after the election, we may see a waiver of the renewable fuel standard to some extent, but I do not think it'll affect demand because the energy industry is too dependent on it as an oxygenate and an octane enhancer, and there's just not many viable alternatives.
So what I'm hearing overall is that if you're harvesting right now, and corn especially, you could still get away with storing some in the bin rather than selling it all straight to the elevator right away.
The big problem is watch your quality, watch your toxin levels, make sure it's that. I think the cash market, if nothing else, should firm up as we go forward. If the futures don't, then I think the cash market will reward storage.
How aggressive would you be right now in trying to sell 2013 corn or soybeans? And there probably is a difference there.
What I have done is price some of what won't be covered by crop insurance next year, some of those early bushels, but watch your margins. If you can lock in input costs and lock in corn prices and soybeans, maybe a little bit makes some sense. But I'm very concerned with tight global situations. I don't think we're going to turn this thing around very quickly. I think it's going to take some time, and I think we're going to have higher prices.
And easy to say that South America is going to produce a huge soybean crop?
Well, El Nino is going to leave things dry in the northwestern half of the Brazil soybean belt. If it does go up, If they do produce, then they can't push it out through their ports. Their infrastructure and their port capacity is too limiting yet at this point.
2013 planting numbers. Farm Futures sees more of a shift to soybean acres rather than corn. They see 93.1 million acres of corn, I believe. What would lead a change there? Is there anything that you could foresee that would maybe start to push people back to corn?
The big thing we saw is Iowa, Illinois, problems with corn on corn acres after a couple years of adverse conditions. It's going to take higher prices to make it worth the risk of going corn on corn a fourth year yet on some of those acres after several years of adverse conditions.